ايتمش. Hello guys, sorry I have been late. I have a problem with connection with this software, so my son has helped me and it's okay right now. So I will be waiting for some people if they are here. Hey Pablo, how are you? Sorry man, I have a problem with connection, so that's why. Hey Zorba, I have a problem with connection, so it's just right now when we fix it. So how are you today? Hey Vincent, good evening. So we have Vincent, Zorba, Pablo, and two others that are hiding. So we will be which window? What happened to the window? Which window? Oh, the old window. I changed the place. Hey, Nas de la Noche, bonsoir. RTV, Cov, hello. MCP, hello for you. Just for YouTube. Kareem, how are you? Doing good? Yes, I'm doing good. Hey, Wiseman. Hey, everybody here. Someone asked me about the window, so I think he's looking here at the window. There is no window, there is the wall right now. I have changed it. A lot of people, they say change it because they don't like the window, they get distracted, so I take this window off. Okay, so I left the wall, as you can see. And sorry for being late. I have a problem with connection, and that's the thing. I have been like 20 minutes late or something like that. Hello everyone. Now we have some people are watching right now, 14 guys. So the subject of today is how to correct your trading mistakes, and this is a very big deal about trading. And if you start identifying your mistakes, this is the first step to success. Now what I mean by that, it means when you know a problem, you should fix it. It takes days or takes weeks or months or years. You should fix this problem in order to make money or to make more money, because all these problems stops you from making money. Hello Jean Wu Lee. Thank you very much, Jean Wu. I think you are. I haven't seen your ID. This is a new Lee. It's like Bruce Lee. Okay, that's good. So as I telling you today, with this session, we try to see how to correct your trading mistakes. Now, before we correct mistakes, you should know what are these mistakes. Okay, there are a lot. And each trader, not all the traders have the same problems. Okay, but there are some common problems that affect everybody, and there are some problems affect few of you guys, and so each trader has some kind of problem. Oh, you are from Korea? That's, thank you very much. Korea, which Korea? North Korea or South Korea? Because there are two, I guess. Hey Zorba, why you sell your stock the next day? It means what was the problem? Why you sell? For me, if I sell the next day, either it could be like a stop loss, or it could be a gap up. Okay, this is the two things I said. But so I think this Felix is having a problem with himself. Okay. Oh, South Korea, Seoul. Yeah. Okay. I know something about Taekwondo. That's why when I see South Korea, I know Taekwondo. Okay. I don't think there is a stock market in North Korea. There is no stock market. Yes, it might be. Yes. Yes, in North Korea, maybe there is no stock market because they have, I think, a dictator there. So do not trust the market and get out with $150. Okay, Zorba, the first thing is why you exit. So since you have a situation, so we can begin with you, Zorba. Okay, you buy today, tomorrow you sell. So what is your reason to sell? It means what did you see? Why you sell? It means if you know your reason, at least you know why you sell the stock so quickly. Hey Alex. Oh, okay. Alex Faber, you say what would be a good way to follow uptrend with your stop loss? Okay, there is training level 7, how to follow the trend. This will give you techniques. Okay, techniques to know where you put a stop loss when the stock is moving up. So these are techniques that you should know, that you should practice. Okay, and it's not patterns or the way the chart looks. No, it is not like that. There are techniques that you should learn. So please, since the discount is still there, please go and check training level 7, how to follow an uptrend. Okay, how to follow an uptrend. It gives you techniques, and by these techniques you know where you put your stop loss. Stop loss, it means not the initial one. Okay, not the first stop loss. The first stop loss, you should go to training level 6, how to calculate stop loss. But if the stock is going up, there are ways you should put what we call the stop loss, but this is to take profits from using it. So these techniques are explained into details, and you learn these techniques and you apply them on the stocks. It goes with all the stocks, okay? But they are not patterns, or like the other people say, you look at this or you look at this chart, the same as this chart, or no, it is not like this. There are techniques that you should learn, and they are skills. The problem is I don't know how to stay in a trade if it zigzag and don't hit my stop loss. It starts decreasing, so I don't wait because I am. So for Zorba, you say, so are you telling me that you are waiting in the morning and you begin to see your stock? What does it do? This is false. Okay, this is a false thing. To try each time to look at your stock, what does it do? Each 10 minutes or each 5 minutes, or this is, you are doing like a day trading. You shouldn't do that. You should leave the stock do whatever it does until the end of the day, and then you can take a decision. If you put stop loss and the price goes to the stop loss, you will exit automatically. Okay, if it doesn't reach the stop loss, why you exit? Okay, stay and you will see the following days. You bought the ebook 7. Yes, it's very good. Try. There are a lot of techniques. Okay, you should follow these techniques, and then when we have a problem with the stock, please send me an email. Here is my email website, and then okay, let's see, here is the email and the website, and you can send me an email and we can discuss the trade, and I will tell you what's wrong. How to trade earning reports, smaller positions. Joshua, Luz, you are speaking about earning reports. Now this is based on the news. Okay, it is so quick. If you want just to do a day trade with the news, you should be waiting for the news and listening to the representative or the executive of the company himself or herself. There are some websites that let you listen to their report. It means when they are speaking, and you should know, for example, what the analyst said that the earnings will be, and then you should listen to these guys when they are speaking. And if they say that it is better than the analyst, because you should have the analyst, and then you should see what you should see the price itself. Okay, if it begins to move up, you buy. If it doesn't move up, you don't buy. But it is very tricky things, and you should need a lot of things, and you should need a lot of patience, and you should be very powerful to take decisions, because in 1 minute or two the stock can go $10 or $15 up. So if you are not quick, if you don't know a lot of stuff, you will not succeed. Okay, so this is about Ben Afam. Salam, how are you? So I don't know how long to stay in a trade. If it's zigzag and I don't hit my stop loss, how long do you normally stay? Okay, I have told you before, Vincent, if you have training level 7 by videos, this is I just mentioned to the other guy. Okay, there is no one knows if the stock stays a few days or few weeks or few months going up. No one knows. So why are you putting limits to the stock market? Stock market doesn't like limits. Okay, it doesn't like limits. It means it doesn't like limits. Don't say the stock you have a rule from yourself. There is no rule in the market, and the profits are unlimited. A stock from $1, it can go to $100 in 1 year or 2 or 3. You can't stop the stock. Okay, some people are buying and it's going up. You can't stop it, and you will never know where it will stop. So don't bother yourself having an idea before the market is going. So you follow the stock daily. At the end of the day, you just watch. Okay, in order to know how to be out of the reach of this zigzag thing, when the stock is moving up and it doesn't do that much good. Okay, there are ways and techniques you should learn. This you will find in training level 7. You go to training level 7, you find examples, you find techniques, and these techniques, you put these techniques on any stock and it will give you a way to stay in the trade. But if the stock is not going anymore and it's going down, it will show you, and then you exit according to the information that you get and applying my techniques. So there is no way that you tell me, oh, this stock will stay 1 week or 2 weeks or 1 month or 2. No one knows. Okay, so don't think, change your way of thinking that the stock is free, it can go wherever it wants to go, and it takes as much time as it likes. Okay, so don't limit. Now our problem is that if the stock is going down, we should take a decision to exit. This, it is in our hands because it hurts us. Understand that when the stock is going down, from the purchase you buy, what does it mean? You are losing money. So when you are losing money, it's better to be a small loss than to be a big loss waiting that the stock will come back again. Some stocks will never come back again and you will lose 70% or 80% or 90%. So this is how my strategies work. So you should control the risk always. Okay, I have a question from Super Lemons. Say, why penny stocks so popular? Now, penny stocks are popular because they sometimes, if you get in a good trade, you can generate a lot of money. That's why penny stocks are appreciated. But the people, they like it, they like penny stocks, but they don't understand that there is a big risk of losing a lot of money. And this they want to, it's like to hide from their actual trading. Okay? So they see the money, they want to get a huge money or huge amount of money. Okay? But they don't think that they will lose. It's like gambling. When you throw money and you think that you will get the jackpot. This is what happened with penny stocks. But understand that there are some penny stocks that are going slowly, and this is what I teach. These are not pump and dump schemes stocks, and this I show in training level 10. If you go to training level 10, how to trade penny stocks, you will find the second category of penny stocks. Stocks that move slowly. It could be $1, $5, it could be even bigger stocks like $10 or $8 or $7 or $15. They go slowly, okay, and they are not penny pump and dump scheme stocks. I would like to try penny stocks, but people don't recommend it. And now, Vic, when you know how to trade, you trade anything that you like. You are not scared of penny stocks. So you should just learn how to trade. And this is what I am doing here. It's just I am teaching you how to trade well. Okay, to do the right thing. Either in finding penny stocks or other kind of stocks, like by search, like training level 2, or by following the stock, putting stop loss and the other stuff. I did buy some of your training level 6, 7, and 13 in your subscription. Yeah, yes, it's very good. It's very good. So 6 and 7, stop loss and how to follow the trend, and this level 13, how to buy stock from support line, and the subscription. Now, what is left for you, Vincent, if you are going to do to know how to make money from stocks, you should go and check level 5. You forgot level 5, which is so important because it gives you how you are making money from these stocks. Okay, there is a concept that you should understand, and this concept, it explains how do you make money from the stocks in general idea. It's not because there are more winners and less losers that you make the money. This is false. Okay, so I will give you the right concept and then you can check it. So you say, what is it here? How to follow market makers into sector rotation. Hey, Joshua Luz, it's not market makers. It's mutual funds that they move the market. It's not market makers. Market makers are the people when they match buyers with sellers. This is their job. It's not their job to move the market up or down. Okay, so understand that. So here your question has a mistake. So I want just to correct this mistake before we speak about another thing. Market makers, why they are called market makers? They make the market by putting all the orders that they have from their customers, orders to sell and orders to buy, and they match. Let's say someone wants to sell 100 shares, the others want to buy 100 shares, so they match. They match these orders. That's it. That's why they are called market makers. Now, if you want to know the rotation, what we call the industry rotation, you should see training level 3. Training level 3 is how to search for stocks using an industry index. So this is what we call industry rotation. You will see how the industry changes from going down to going up, or some industries that are going up, they stop and they go down. So there is a rotation. And this is done by mutual funds when they sell some stocks and they buy some stocks. Okay? Hello, Martin Miner, how are you? Hindu Sama, hey, you saw the Bitcoin was today. Which is, oh, okay, I'm sorry. I'm sorry, Hindu. Hindu, we are not doing Bitcoins, and we are not speaking about that. We speak only here about stocks. So it's not our subject, and I can't answer you because I don't do Bitcoin and I don't know what is it or who move it. So no one knows. So we are not going to do something that we don't know the source. In stocks, we know that the stock market, and we have companies that get listed, and if you buy a share, you know that it exists. Bitcoin, it's all it is virtual. If tomorrow it is $1 and the other day is $800, it is something virtual. So no one knows from where it comes. Hendo, you say, please answer. I told you, I'm just answering you that we are not doing Bitcoin things. We are not trading Bitcoins here. And I'm sorry to tell you that I don't know what is a Bitcoin and I don't do it. I don't trade it. Okay, so you should go to other people who are good at Bitcoin and they can help you. So for me, I will help with the stocks only. Thank you very much, Hendo. But Hendo, stay with us and try to learn about stocks, because they are something that it is tangible. Tangible, what does it mean? It means if you go and you buy 100 shares of Twitter, you know Twitter, and you can go to the company financial, you know that Twitter exists, and you are buying shares from Twitter. Okay, this is stocks. You understand that you are buying something real, although the share is virtual, but it is real. Okay, you have money and it can go up, so it is a real thing. Bitcoin, no one knows what is it. Okay, so you can lose all your money in one day, and no one knows what is it or what did happen. Okay, Vincent, it says, Do you trade a day before earning of day or stock? Is there so much risk for you? Do you sell your position before earning date? No, no. For me, I am not scared of earning dates. If I am in a trade and there is an earning date, I will stay. Now you ask me why? Because I am not scared. I do the trade until I finish it. Okay, so I'm not scared about. But you, if you are scared, and you can do what? If you are scared, you can check the earning dates and you can exit the day before, or the before the earning dates, before the company announces the earning dates. It means what is the earning for the company. But here is the problem. What if the stock has a gap up of $10 or $15? What do you do the next day when you see the stock is going up and you are in and you exited before? So you will say, I regret not to stay. So the thing is, I'm telling you, is that if you are scared to trade, don't trade. Stop loss. Stop. Go to the next slide. Okay. If you are scared, this is a real problem. I will speak about getting afraid of the market in a minute when we are speaking about the problems of the stock market. Okay. So as I told you, if we begin to speak about this. When you are afraid of the market, and before you begin to buy, you think that maybe you lose. Okay? And you get always scared. Or you buy and then you do like Zorba. The next day the stock, he began to look at the stock in the morning, in the afternoon, and he was so scared of the market. So you can't continue doing this and you become a successful trader. You should fix this problem. Either you trade or don't trade. If you are scared, don't trade. Now, Vincent, as you told me, there is much risk when there is a gap down. Understand that this is the market. Why do you think that you can always make the money? There are some times where you lose money. This is natural. This is the nature of the market. Is winners, losers, winners, losers, winners, losers, until the end of life. Okay, no one will change that. Okay, so either you accept the market as it is because you can't change it. Okay, there are, for example, bad news and people they short the stock, or some people sell, or whatever. So you should accept the loss because it is part of the game. Yes, Vincent, no. Stop loss doesn't fix the gap down. Okay, because it happens after the market hours. It means after 4 o'clock or before 9:30 a.m. So if the news comes at that time, you can't do it. Hendo, you are speaking about dividend. You know, dividend, when you have a lot of money, you can make money from them. Okay, in general. But if you have small money, you are getting little money. So this doesn't help that much. And if you are interested in investing in general with dividend or without dividend, like some stocks without dividend, please, you can check my training level 16. How to invest using dividend stocks. This, it gives you the dividend, it gives you the non-dividend stocks, gives you tax. You search for stocks according to tax, because some are taxed more than the others. There are a lot of information about risk, about investing. If you want that, you can go to training level 16. Umaru Yarga. Hey Umaru, thank you for your teaching. I have two questions. The first is, I watch my account so often in the morning hours when the market opens. How can I stop checking my stops? Okay, stay away from your computer or from your or take I don't know why you are looking at the market in the morning. You have nothing to do. Try to do something else. Go outside or go hiking, or if you don't have morning in the morning, or go outside. Don't take your cell phone, don't take your computer or your tablet, or in order to see, because you are just wasting your time. The market is doing a lot of things in the morning, so you will never know until the end of the day. And even if you know something in the morning, it will not help, because you should see the end of the day in order to take actions. You know, you say I have a small account and I want to buy $25 to $50 of stocks. Since you have small account, you can't buy those stocks. So why are you? You can buy, for example, the stocks that are $10, $7, $5. Okay, you can buy also penny stocks if you like. If you can't, because the problem here is that when you have small account, this is by itself is a problem. Okay, so in the future you should save more money to fix this problem. So Vincent, what's the problem of internet do with your gap down? Now, I said in the beginning, it's like 2 or 3 minutes when we begin. I say I have problem with connection with my software. It's not my connection, but my software doesn't work. So my son has fixed it. But I'm not speaking about that. Speaking about the gap down, I say if you are scared, if the earnings comes, you check the website, your stock, and you find that the earning, it means it's tomorrow, after the market close. So in the morning, if you don't want to stay, you can just sell your stock. But for me, I'm not doing that. I like to risk my money. One time, this is why I like risk, it's just because of the experience. One time, I bought a stock at $78. So the next morning, it was $135. Okay, I double my money. Do you think if I double my money, I care about other gap down like 5% or 10% gap down? Man, I have doubled my money. I don't care about other gap downs. Okay, so and it's not always you get gap down. It's like a stupid idea. Okay, the market doesn't follow you. It is what it is. It's about the company's news. Have a seat. $1 million account will produce 50K a year at 5%. So just $1 million in your account, and you can live on percent. Yes. See, these calculations I put in training level 16, how to invest in dividends or stocks. But the people, in order to reach this $1 million, it's a lot of money, because the people, they don't save money. They spend a lot of money. Now, if you, for example, you are a middle class, okay, you are making nice money, okay, especially those doctors, lawyers, it means you are making good money. You can very quickly, in few years, you can reach your $1 million if you save more, and you can have a nice profile or portfolio, and you can run this by yourself. You buy stocks that have dividend, that are stable companies, known and so stuff, and just you get this and you are okay. But people who have little money, they can't do what someone has money. That's why I told you, when you have money, opportunities open to you, not just in stock market but in everything. Because you have money, you can see those opportunities. Now if you don't have money, you can't see these opportunities because you are poor or you don't have. Okay, that's why the people who have money can make more money and see better opportunities and so on. I give you an example. If you have money and you want to buy a house, a single home or a house, $200,000 or $300,000, let's say a small single house in a nice neighborhood, okay? Let's say it is $300,000 and you have the money, you buy it. Now if someone else, he has not the down payment, he can't pay all the house, but he has only a down payment of $10,000, $20,000 or so. What does it mean? It means that this guy, the second guy, will buy the house double its price. He will buy it, let's say, from 200, he will buy it like $400,000 or $500,000, depending on the interest rate. So you see that? So the guy, he bought the house at 200 because he has money. The other will pay double because he is poor. Okay, because he can't pay more. This is the difference between small account and bigger account. When you have a bigger account, you can do a lot of things that a small account can do. And this is what I'm always talking to you guys, is that you must save, especially when you are young. You are 25, 30, 35, 40. You have time to make a good portfolio, and you just fill it with the stocks. If you are investing for the long run, this is a good way to make money in the future when you are old. Thank you, Hendo, for the questions. I want to suggest if you can have a live streaming for subscription candidates, it would be very beneficial. A live streaming for subscription, yes, it could be. It could be, but in my subscription, it's like live. I just show you the stocks, and I show you what is good, what is bad, and how we search. But I don't know how to do it live. This I don't know really, but it might be in the future, maybe. But you can watch the subscription right now, whatever I have, and take that question about a stock and you send me information and we can discuss this. Because the people who are learning are the people who are asking questions and always trying to understand why is this, why is that. Some people who are just passive, they just get the information but they don't think about it, they will forget it. Okay? But it is good idea just for YouTube. If you have a good idea how to do this, send me information. I can think about it in the future. Thank you very much. Buying stock with a big bank broker is trading mistake, but I found out what is the best bank for fees commissions. Okay, wise man. Here in the United States of America, we don't go to banks, we go to brokers, because banks, they have a lot of fees. A broker is very simple, it has just commission. Okay, and if you buy, for example, there are some brokers, if you buy ETFs, they are free from commission. Those who want to follow the market for the long run, using only ETFs, you don't pay commission also. Yes. online discount broker for me is better than banks, and banks, they have a lot of fees. If you can just try to see, I have a student before, and he put a lot of money in the bank, and he does all his stuff, and when I speak to him, he finds that he has done a lot of mistakes, and he go to the bank and maybe he changed everything because he doesn't know what fees are taken from his account. He doesn't know. He just put money and he see that his money is growing, but in fact they are taking a lot of money from him. So this is what we call fees. You will never know what are these fees. That you just find your account is shrinking, taking fees, but you don't know really what are these fees. Yes, bigger account, you know, you are more free to buy whatever you want than smaller account. You mentioned you will come out video with how to trade in the future with subscription. When will that happen? Not yet. I'm still trying to find the best trades that shows you really the movement of the stock, and I can do that subscription, but it is not now. I'm still working on it. I told you before, it takes 2 or 3 or 4 months, and we are just working on that, because almost my trades, some of my trades are very long, 1 month or 2 months or 3 months or 4 months. So if I want to have one trade or two, I should need time. So my way, Johnson, we are not speaking about stocks, a simple stock, and we begin to explain what is this stock and how we buy it or how we sell it. So my way, Johnson, if you go to my training level 2, how to search for stocks using stock screener, you will find how we buy the stock and how to get the signal. Any stock, if you have a list of stock, it will show you when to buy the stock. So, or if you don't have, you can go and do what we call a search. Okay, how to search for stocks using stock screener. You use the stock screener, and daily at the end of the day you will find stocks to buy. Okay, so Mayway Johnson, this is how we do business. Okay, there are some criteria that it should be met in the stock, and then we get the signal at the end of the day, like 3 o'clock or 3:30, and then we buy it, and then we put stop loss. So if you are interested, you just go to my training, by videos or by ebooks, and you can just take the training and you do it, or you do the subscription, which has 4 training for free, training level 1, 2, 3, 4, and you get to know how to search for true. This is what I say to you, because if you want to know in each stock, there are some way to know when to buy the stock, and this is shown in the training. It's very easy. It's not very difficult. Okay, and Joshua, we have spoken about Robinhood last week, like in 1 hour. So there is no free lunch at the market. Don't think that because it says there is no commission, it means that there is no commission. If there is no commission, there are fees, but you don't know these fees. So you should learn about them. They will never tell you, because this is the business. This is the model business they try to show the people, because the people, they know commission. Oh, there is no commission, there is no commission, I'm happy. Who tells you inside what they are doing? Okay, so you should learn by yourself. You should go online, Google it, and you'll find some information. Does your strategy? Yes, I have training level 18. It is how to short the stock, how to short the stock market, okay, it's a training level level 18. Now if you take this, it will show you how to follow the indexes or the general market indexes and how to short. Now without selling short, I'm not speaking about selling short when you sell a stock. This is not selling short as we know. This is shorting the whole market or the whole index. And this is what I do if there is a bear market. But understand that a bear market is a false idea. Bear, it means that most of the stocks are going down, but it doesn't mean that all the stocks are going down. So we are buying stocks, we are not buying the market. So understand the difference. Okay, another question. During 2007 financial collapse, almost most of the sectors were down and money flows into gold and silver and bone and oil. If we have another collapse, do you think the money will flow into gold? So I don't know where the money will go until I see it. That's why we use the chart. Okay, we use the chart because it tells us the money where it goes. It will show the hints. Because understand that mutual funds, when they sell the market, it means they sell off. They take this money, they are obliged to buy other things. So maybe they go to bonds, they go to gold and silver as it happened before, or it goes to other things. Okay? So always understand that there is always something good. And even I told you when there is a crash, okay, you can go and you short those indexes that are going down. You short them by using my training, which is training level 18, how to short the whole market or sectors or industries, okay, indexes, how to short them. There is a way. You short them and then you can make money when the whole market is going down and you are making money. And this is how to make money even though the market is going down. Okay, it's double sword, as they say. Okay, let's say here. Mesh Papa, as I told you, we are not speaking about brokers here. We are not giving reviews about brokers. So we try to focus on what are the problems of trading is better. No, Vincent, this is not to short stocks. This is not the same. It means it's just a means. It's not a stock that you short. We are not shorting stocks here. But you short the whole index. It's different. Okay? It's different. It's not like a stock. No, I didn't use the stop loss when I first began, because I was doing day trade and I see when it is too much, I just exit and that's it. So I don't use it for day trading before until I switch to swing trading. Okay. So, Melch Papa, it's thank you very much for the information about the brokers, but we are not interested in those kind of brokers, and we pay the commission. So each one should look very well to what he is doing with his thank you, Mersh Papa. I have seen what you are telling in the thing, but see, we are not dealing. Our students are not dealing with this kind of software or these apps. They don't give you the bid and the ask. If there is no bid and ask in a broker, I should take my money from it. There is no way they play the game, okay, like this, okay? So yes, Vincent, this is called inverse ETFs, okay? So it has nothing to do with shorting the stock like borrowing from the broker and selling. No, it's not the same. No, see, Mersh Papa and Mayweather Johnson, please, later you send the emails to each other and you continue your discussion about these brokers without commission, okay? So in our session, we are not speaking about brokers without commission, okay? So so we are not going to spend our time speaking about things out of the subject. Okay. Mersh Para and May Johnson, please, this is the last thing I tell you, both of you. You are not new. You are new here. If you don't stop about talking about this broker, I will take you from this chat. Okay, and it's over. So please go back to our subject. If you have questions, if you don't have, just try to focus on what we are saying. Now, I say there are many mistakes that which we call trading mistakes. There are psychological mistakes that traders do, and we have one of the psychological problems. Hey, May Johnson, what did I tell you? I told you we are doing the mistakes of trading. We are not speaking about this Robinhood app. You go with your friend and you speak the whole day and night about it, and you give proof to yourself. So we are not interested. Okay, here the guys are not interested to hear about Robinhood. We have seen these subjects before and we are not interested. So if you want to subscribe to this channel, go ahead, and thank you and good luck on another channel. Here I am helping right now people to understand their mistakes. I am not going to speak about Robinhood. Okay, if it is your subject, go and do live stream and speak about this subject, and I will subscribe to your channel, and I will be looking what you say about your experience about Robinhood. Okay, so May Johnson, try to be polite. You see Persh Papa who said back on topic. He understands, and you don't want to understand. Okay, so I am here. I'm not wasting my time. I'm trying to help my students, my followers, the people who like swing trading. I'm trying to help them with these trading problems in order to fix them. This is why I am here. I am not here to do entertainment. Okay? Hey, my way Johnson, losing trades. All the people do winners and losers. So I know you are a beginner, you don't understand anything about trading. I'm trying to help you, okay? That's why we use stop loss. There should be losers, yes. In every trader, he should have losers because we don't control the market, okay? This is... And please, my way Johnson, try to be polite. I told you before, but you don't listen to people. Try to be polite. Try to listen. Ask your questions. If you have questions. If you don't have questions, just listen. Okay? Hi, how are you, Muhammad bin Haba? Now, as I told you before, so the trading problems or mistakes that we are speaking is that everybody has some kind of problems, and these problems you should fix them before you become successful. Okay? Yes, yes. It means you know, no problem. Yes, no. Okay, I will just explain about losses because there seems to be. I told you always that a trader, he must have winners and losers. This is normal. Okay, who don't have losers? That's why we put stop loss. We put stop loss in order to exit from trades that are losers with a small loss, and this is what I am teaching for years. So, and someone comes to me right now after many years teaching, and then he told me, oh, the losers, the losers are always there for everybody. Okay? Yes, it means when I was a beginner, I do all the mistakes that you are in now and that you are speaking about. I have done almost all the mistakes, but because I have corrected all the mistakes that I know, my way of doing business has changed from losing to succeeding to making money. This is what I want to explain to you, at least to understand. Now we have spoken about hey investor land at a high ROI. So this is the way. For example, psychological problems. I will give you one one I think Zorba has told us before, which is he buys today and tomorrow he was so scared that he is beginning to look at his stock in the morning, 9:30, at 10 o'clock, at 12, at 1 o'clock. This is not swing trading. This is a psychological mistake. It means you are scared of the market. Now, for me, if you have earnings reports, and it is before the market opens, okay, you can check in the morning, even before the market opens, to see if there is a gap up or gap down. You can see that, okay. So there is no problem with that. But following your stock every day, each hour or each half an hour, this is not swing trading. Swing trading is so easy. It is made not to be stressed out. You should not be stressed out, okay? You should only be focused on results, and each day, at the end of the day, 3:30 for example, you try to take a look at the market and you see where your stocks are. Sometimes the market is down, but your stocks are up. So it depends. So it depends where you are in the market. Now, see, investor land, I'm telling you the thing. The only time we don't put stop loss is when you invest. Since your ID is investor land, if you are staying for 6 months or 1 year or 2 years or 3 years, there is no need to put stop loss because you are relying on the fundamentals of the company, that the company is undervalued and it becomes bigger and bigger in the future. You are investing, so you don't use stop loss. But in swing trading, you should use a stop loss, because when things get worse, you should exit before it gets worse and worse and worse. And the market makers, they have no relation with your stop loss because they don't see it. If they see a stop loss, they can make billions of dollars each day. But this they can't see. So stop saying that the market makers are seeing. If you go to level 2, which is where you see the bids and the asks, you see that all are there. The bid and the ask. Okay? So if they know where is the stop loss, where is the thing, they can make a lot of money, but there is no. So try not to think like that. Take your head from this market makers and try to get trained in how to use the stop loss, how to follow the uptrend, how to buy stocks correct way. This is what you should focus on. Don't focus on things that it is not your business. Okay? So market makers, they are helping the market to make the market, to match sellers with buyers. They are not there to take a stop loss or to see the stop. They can't, because the exchange, they don't give them this opportunity to see. Hey Zorba, big night or good night, Zorba, and see you next time. Yes, Mersh Para, as you are telling me, winning big and losing big causes irrational behavior. Yes, it means people are for big risk. They can go bankrupt or they can go into debt. Some people do, yes. They are so crazy. It doesn't mean they don't know how to trade. They know how to trade, but they go to riskier trades. Okay? And this is a real problem. This is a real problem with these guys. Man's good loser, as he's not hoping for. Yes, this is what I said before. But you know what? Sometimes I put stop loss. This is by experience. I know they don't know. Sometimes I have 1 cent from my position and it will be triggered, but they don't. It goes down and then it goes up and doesn't touch. It doesn't mean that my stop loss is too low or is too high, but it means that they don't know. And market makers are working with orders. If the orders are big and they are coming to the market and the stock is going up very quick, okay, they have no time to go down. Okay, so try not to make these market makers as sharks who are taking your money. They take money for no money. They make their money because they sell and they buy instantly. They don't wait for a long time, and they can't move the stock down because it is. For example, there are stocks that are big, like let's say Facebook, for example, or Apple. You can't move Facebook, because if you want to move it $1, you should need $5 billion to move this stock $1. So it should be someone big. It's not some people who are small and they can move big stocks. Thank you, Mayway Johnson. Thank you for your understanding. You see, listen, Mayway Johnson, here I'm trying always to help all you guys. Even if you are a subscriber or you don't subscribe, or you just watch, or you just come watch without subscription, it doesn't matter for me, because I'm just helping. Okay, for my training, it is not for everybody. My training, it is for those who want to follow what I do. For the people, they have their own opinion, they don't want to follow, it's their problems. For me, I'm just trying to share what I have as experience for many years trading. I trade almost 1,200 stocks a year, so I trade a lot. So I know a lot about stocks, big and small. That's why I'm trying to give you my experience. If you have other experience and you have another idea, you just tell me what's your ideas about the subject and we can discuss. So it's a very good thing. And this is why we are here. And I have a lot of students who have taken my training and still they have some ideas, they express their ideas. So all the people, you can make money if you are right. That's it. No, see, I don't use volume in my trading, Joshua. You say to follow increase. This you can do it for some people who are doing day trading in penny stocks, and they see the volume which is going higher and higher. You see the price going higher and higher. They go to these penny stocks and they try to trade them. But for us, I buy at the end of the day. I don't care about this volume thing. The volume is only for the bid and the ask. If it is small, like 1 cent, sometimes 2 or 3 or 4 cents or 5 cents, it's okay for me. Okay? It means the stock is liquid, is good. I just buy it. So I don't care about volume a lot or high volatility, as you say. I care about my criteria first. My criteria shows me what to buy, and this is our fixed criteria that you can learn and that you can use in your trading. No, don't be my way, Joseph, don't be upset, because you are speaking about a subject that it is you should know a lot. Even if you use it, there are something that are hidden always, and you will never know. I know a lot about this kind of things, but I'm not going to tell you these things, because you should go and learn by yourself. You should search for this kind of stocks, because there is no free lunch at the market. Understand that. When you are a customer to this broker, he will take money from you. How? You should learn that. It's not me that I will show you how. Okay? So you should learn, and this takes time. Speaking of Facebook, you recently make a video about Facebook. Do you think Facebook is a good trade based on your strategy now? No, Vincent, I'm not giving my opinion on any stock. Why? Because you know, if you take training level 2, you know if it's a good buy or not. So you know it. Okay, you go to the chart and you check my criteria. If it's good, you buy. If it's not, you don't. And even if you buy and the stock doesn't go well and goes back, so you sell it with a small loss. This is how we trade. Okay, we don't control the market. The market is doing what it is doing. If you are right with the market, it means with the trend, you will make money. Whatever happens in the market, you will make money. Now, if you are wrong with the market is going down and you are going up, you make a mistake. What you should do is you should exit the trade very quickly, and that's it. Thank you, Joshua, for your questions, and thank you, Vincent and Mayway Johnson and Joshua, for all your questions, and Investorland. So, as I told you before, this is a big mistake when you buy today and you sell tomorrow. Now, for me, I have exceptions. Why I sell tomorrow? Let's drink some coffee. When I buy a stock today, and there is, for example, earning dates. Tomorrow, in the morning, I will just look if there is a gap up or gap down. I will try to look in the morning before the market opens. If I find a gap up, sometimes I sell even before the market opens, okay? Or when the market opens, but most of the time I buy before. There is another idea. You can buy, you can sell half, and you put a tight stop loss when the market opens at 9:30. You see what is the price? Let's say there is a gap up, it's $10 gap up, it's very long, lot of money. What you should do, you should sell half of your shares, and the other half you put stop loss. Let's say the gap up is $10, you put it at $8. If this stock is going down the whole day, $1 or $2, and it reaches stop loss, you will sell the other half. It means that the market is not good to continue going up, and maybe it's going to be down. Okay, so this is what I do, because sometimes if you don't sell, sometimes you have a gap up of $10, and the stock will be going down from the morning at $10, and it goes to $2. So instead of making $1,000 if you buy 100 shares, because it is $10 for each share. Let's say you buy 100 shares. Instead of making 1,000 and the stock goes down to $2, you make only 200. And we say, oh, 200 is good money. No, man, it's not good money compared to 1,000. So that's why there are techniques, and there are exceptions to these techniques that I put in training level 9. It is called exceptions to the training rules. It means there are rules and there are exceptions. So I'm speaking about general rules and exceptions also. Kareem, what was your best and worst stock trade with penny stocks? No, really, when I was doing, I don't, at that time, I like bigger stocks. I don't do a lot of penny stocks, and I didn't do penny pump and dump schemes. I was not following those pump and dump schemes. But one of my good trades is it was $11.50. It goes to 29.5 in 3 days. It means I get nearly $300, 300% of my money into that trade, and this was one of my biggest trades, because the stock was big. That's bigger. It's not small stock. That's why I don't do penny stocks a lot. I do penny stocks when those that are going slow, okay, but I don't do pump and dump schemes, because those you should follow scammers and should follow these guys who are playing with the stocks, and I am not following anybody else, so I'm doing the trade as I see it. So you said talk about bogus stocks like dry ships, which go up and go down like yo-yo, and have been doing so. See, for me, I'm always seeing stocks. There are some stocks that's worth $5,000, and now you find them $1 or $10 or $5 or 1 cent. So there are stocks that this it happens in the dot-com boom. It's called the dot-com stocks, where any internet stock, they go from 1 cent to $200 or $1,000 or $5,000. This was an era where there is a bubble in the market, and there is excitement, and everybody buys a penny stock. He will become a millionaire. There are a lot of people who become millionaire like this, but it was a bubble that the market has made it. But these bubbles have gone. okay, have gone. It's rare right now. Yeah, no, for me, from 10 to 12, it's 20%. Yes, I can sell half if I want to, but it depends on the stock. So it depends on you how many you buy, because someone who buys 100 shares and the stock is $10, how much he paid? He paid $1,000. But you, if you have paid, let's say, if you put $10,000 or $20,000 in this stock, and you will see a big profit with these $2, okay? When you see $1,000, $2,000 that coming in one day, it's a good thing to take half and to leave the half. This is just a technique, okay? Because maybe the stock from 12, it continues to go up to 15 or 17 or 18, so no one knows. But for me, it's just a technique that I use for many years. If I see the stock has gapped up and I make a lot of money, I should sell. Yes, no, see, Mayway Johnson, there are two kinds of penny stocks I just explained before. One, it is called pump and dump schemes, which are very, very volatile. It goes high too much, very quick, and it goes too much down. So this is what to avoid. Except when you are following them for years and you know and you are searching for them, and you won't risk, and you are always risking your money. This is another thing. This is, you know what you are doing. Now for me, I'm trying to show you another way of doing penny stocks, but those that are moving slow and they have no pump and dump scheme. It means they are not manipulated. You see a stock going from $1 to $1.40 in 3 months or in 1 year. So here there is no manipulation. The stock is going normally. And these stocks, sometimes I find these stocks, I buy them and I leave them for 1 month or 2 months or 6 months, and I can make a lot of money from them, and they are not penny pump and dump schemes stocks. So you should just make the difference between them. No, Joshua, the dividend income, you can do them with this 30 stocks if they are good stocks. But if the stock is going down, what's the need to take what you call a dividend if the stock is not doing well? You will be losing money even if you have dividend, because the dividend is taken from the price, and the stock is going down and going down. For me, I prefer stocks that go up, and if it has a dividend, it's okay. Even if the stock doesn't have a dividend, I don't care. What I care is the price, okay, going up without dividend. And I don't care about that. I don't care about the dividend a lot. If you want to invest in dividend, as someone has told in the beginning, you should have $1 million or more, and you keep this into an investment and you leave it. And each year you get dividend and you live from this dividend. This is for the people who have a lot of money and they don't trade. But I'm telling you, but most of the people, they are beginning to trade, they don't have $1 million. That's why I am not going to speak about those tiny people who have money. No, I wasn't trading in 2008. I began in 2010 and 11, and I have been with gold and silver. When the big move of the gold and silver and the old stocks, I was trading those when I began. Okay, so I was looking at what you call precious metals. And these, like ETFs, like GLD for gold, and CLV for silver, I was doing all that, and I discover a lot of kind of stocks. And then after that, I get to the big movement of the energy stocks when they were moving up. And I have the big movement of what you call the drugs stocks. It means when I see a big move, I follow these kind of stocks into different industries and I follow them. Most of the time I find a lot of stocks to buy, and most of the time I get good trades from them. Yes, Facebook, I was one who was trading always, and it would say buy when it was when it reached 17.99. Oh no, 17.55. This is the low, and when it reached the next day 19.99, I bought it. So I have a video that that shows I say buy now. At the time I wasn't know, like we have 800 views or something. So, and the people, they don't know what they are doing. Even last year when I say after the Brexit news where Great Britain has left Europe, on 2 days when the market was down for Dow Jones and for the other indexes, on Tuesday when the market goes up very good, I say this is buy. And this is one of my techniques used in training level 13. How to buy 13, how to buy from support line. And this is one of my techniques, and I have the videos if you want to go through. It is on the 28th of August 2016. If you go to my videos, you will find what I say. I say if this is a buy, if next day the stocks will the index will be going up, it means that it is a very big move. And from that we have a very, very big move until now. It means 1 year big move in the market, and a lot of people have made money because of this big move. Okay, so you should know just where you buy, and then you can make a lot of money. Yes, Vincent says what you should do in that. Now, first, when the market is going down, it doesn't mean that all the stocks will be going down. This is one thing that you should understand first. Okay? It is not. It is not all the stocks. It is most of the stocks, but it is not all. Okay? Second thing, I should use training level 18. Training level 18 is how to short the whole stock market. It means to stock the indexes or to stock the sectors or industries, but not stocks by themselves. Because I don't sell short stocks in swing trading, because sometimes when you have big news or good news, you will have a problem. But the index, most of the time, it's very heavy. It doesn't go up that much or down that much, so it goes slowly. And if the market is a bear market, most of the stocks are going down. You can make money into some, and you can do that. You can short the stock. You can short a sector or industry, like what did happen with energy stocks. Energy stocks went down by themselves, but the whole market was doing good. Okay, so you see that? So you see, it's not everything moving for all, but there are some exceptions. Thank you very much, Mayway Johnson. I should drink coffee to stay awake, because if I stop coffee like 1 hour or 2, I will be sleeping. That's why always I have coffee with me. So as I told you, Yes, Mersh Para. The thing I do is not predictions. I don't predict for the future it will be this or that. My strategies are not predicting. My strategies are based on price action. And I give you what I think according to what I see in the chart. So I don't predict anything, but I should see a sign. So I don't say tomorrow will be good or bad. No, I should see a sign today, and I will tell you tomorrow it can be good. If it is not good, I don't care. Okay? So I don't care that much, because if the stock doesn't move up, you can't push it to move up. Okay? You can't control the market. No, I don't do short selling. I don't do, because this has to do with the risk. Because sometimes there is good news, and sometimes some stocks they have a gap up. If you are going down and there is a gap up, you will be losing a lot of money. And some people, it is an unlimited risk. Do you understand what does it mean, unlimited risk? Let's say some stupid people, they go to short penny stocks, and it is one of the riskiest trades. If you are a trader, never short stocks which are small, never. Okay, and you hold for tonight, because these are small stocks, they can be moved by anyone. So any manipulator can manipulate this stock, and by buying a lot, and the stock will go up a lot, and you will be obliged to buy that price, and then you will lose not just your money, but you lose broker's money, because the broker will pay for you, but he will stop you from trading, and he will follow you until you pay him back the money. Okay, so that's a big deal. That's why try not to short stocks, especially penny stocks. But for me, I don't short at all. But I do what we call shorting the whole market. Yes, with the stocks, but it is not with ETFs. But it is not the same as a stock itself. It's not a stock. It's like an ETF. It attracts an index. In the index, we have thousands of stocks, or 300 or 500, depends on the index. Like Dow Jones, we have only 30. S&P, we have 500. Russell small stocks, we have 2,000. Okay, so you should understand which index you like to short. Do you hold bear index ETF? No. See, I don't care about this stuff, because I am always buying stocks, and if it goes up, I will be making money. So I don't care about these bear indexes, and I don't care, except when the whole market is in bear market. It means in general there is a trend down, and most of the stocks are going down. At that time, I will change my strategy and try to short the whole index that I see. Okay. So I will have just 1 or 2 minutes break, and then I will come back. So try to just wait for me. Bring some coffee or some drink if you are going to stay more, and I will see you just in 1 or 2 minutes. Hello guys again. So as I told you about this bear thing, if I see that there are indexes or industries are going down, okay, and I think that there is a downtrend, I try to use my strategy, which is shorting the whole index or sector. But this, it is not shorting a stock. It is not, okay? It's not I borrow stock shares like the normal stock. This is called selling short a stock. This is training level 11. Those who want to do day trading and they short stock a lot, you can go and find the techniques that I use for short selling, which is how to sell short a stock. But what I mean here, for an index or for a sector, okay, it is to short the whole index, and it is not the same. There is no interest rate. Okay, there is no interest rate. It means you just when the index is going down, you see that your stock that you buy, which is an ETF, is going up, and you see it's green. It means that you are making money. If you made a mistake, it will be red, and you are losing money. This is just an idea. Do you do option trading? No, just for trade. I don't do options, because options you should risk all the money, and you pay for the time you stay. This are two things that are bad in options. It means there is too much risk, because let's say, I'm not speaking about someone who's putting $100, $50 in an option. They say, "Oh, I'm doing option." No, I'm talking about traders who do 20,000 or 50,000, 100,000. They put it in options. And let's say when there is a bad day or there is bad news, all his money will gone. So that's why it is risky. People, they think about money. They don't think about risk. And in trading, when you become a good trader, the only thing you think is how to preserve your money first. How to think about risk first. You shouldn't do high risk trading, because if you do them and you do a mistake and you are not right with the market will take a lot of money from you. That's why you should take care of your business and don't do much risk. Yes, it's not only for you. It's options is for everybody, especially beginners, because all the money that you buy, all the things that you buy is at risk. It's like gambling. When you put your money, you think that your money will not go back again, so you are losing it each time. So, Investorland, can you explain to me what do you mean by I buy a stock and right away there is a limited buy? What does it mean you buy 2 times? I don't understand what you say. Investorland, if you can formulate what you say, because you say and rapidly going towards my limit buy. Are you buying 2 times, or what do you mean by that? Yeah, why you don't buy from the support line? Okay, because resistance line is easier to find stocks daily than to search for support line. Support line, when you are looking for this kind of stocks, you should look for a lot of things, and the success rate is small. Okay, that's why a lot of people, they don't. For example, if you want to, let's say, I will give you an example. I bought from support line in Facebook at 19.99. The stock last day, for example, it was 17.55, and this is the low of Facebook. The next day it goes to 19.99. When I see this, I bought. I stayed until $32, and I sold at 31. This is the trade I do. Then the stock will. I have a lot of gap apps with Facebook, and I always publish these gap apps when I have gap apps. Okay, so and all these trades are documented. I always put them on YouTube. Okay, until now. And each time I have a gap app or something, I put it. So I followed Facebook a lot. I followed also Twitter. But when Twitter is going down, I made a lot of videos asking people to be careful because this stock is going down and we will never know where it stops. So buying from support line is more riskier, and you should attempt a lot. As I told you before, no one knows the future. You will never know if it is the real support line, yes or no. But if you buy from training level 2, which is from resistance line, it's very easy. It's very easy. If the stock continues to go up, you are right. So you should just stay and make money. But buying from the bottom, after one day or two, it can go down again and crosses the support line and goes down and down and down, like what happened with energy stocks. For 1.5 years, they are going down. So it's very hard to know where is the stop. Some people attempt, but you do mistakes. So you should be accepting a lot of mistakes, okay, to do to get good results. So it's the rate of success of resistance line is better than support line. But for me, sometimes I follow stocks and I buy from support line, but not that much. Okay, and you should wait too much. You should wait too much, 2 months, 3, 6 months, 5 months, until you get good results from this technique from support line. But sometimes they are very good techniques. So investor land, I asked you a question, and I don't know if you have heard me. Investor land, you say I buy a stock and then it's rapidly going towards my limit buy. Yes, there is gravity, you know, when the stock is down and is through gravity, and it's very hard. So for me, I like stocks that go like rockets, okay, that they don't like gravity and they go to the sky. This is what I like. I don't like to follow those stocks that are absorbed into the ocean, into the bottom of the ocean. No, I don't like these stocks. Okay. Yes, wise men, I told you that the success rate is not that good, and you should follow a lot of stocks like this. Okay. This needs that you know a lot of stocks and you put them in a list and you follow them. And each time there is a point where you buy, you should buy and wait. If you succeed, you stay. If you don't succeed, you sell with a small loss, and then you do it again, until you succeed. Okay, so it takes a lot of time. It takes a lot of mistakes to do. That's why for me, I'm trying to make it easier for me to find better deals, easiest way. Okay, I don't want to put I have always a list of indexes a list of stocks I have always, or stocks that I like, but I don't buy them right now. I buy them when they meet my criteria. So I leave them, and each day I check them. If they are far away from my point, so I just forget about them until they come to me. It's like indexes also. I have some indexes and I watch them. So when I find a good index, I go to the stocks and I see whatever stocks I want to buy from that index. So it's always. So investor land, you say, sorry, what was the question? You have written and you said that you buy a stock and then you say rapidly, what do you say? Rapidly going towards my limit buy. So what do you mean? So I don't understand the what you have written. What you have written before. This is I can make a copy of what you have written. Here is the copy of what you written. So you just explain to me what's this to buy that you say. You said sometimes I buy a stock. You say I buy a stock. Okay, you bought it, and then you say right away after a few minutes the stock price goes toward my limit buy. But I am saying rapidly going towards my limit buy. Well, what do you mean by limit buy? It means I don't understand what you want to mean by that. That's why my question. If you can understand what you have written and explain again. Okay, another let him think about this thing what he has written, and then he can answer. Another thing that I want to speak about problems. We have spoken about someone who buys today and he wants to sell tomorrow because he was scared. This is a problem, a psychological problem. There is another problem which is the opposite way. When someone buys a stock and he doesn't want to put stop loss, and next day the stock is going down and he is paralyzed. This is psychological problem also. These two problems are psychological. It means the first one, when you sell with little profits, this is a problem, a psychological problem. You are scared that the stock will go down and you lose the little profit that you have. The second one, you think that you are right and the market is wrong, and you think that the stock will go up again, and this is naive reflection to the market. The market will crash anybody and he will smash anybody who is naive. Who tells you that there is a sell-off? All the people are selling. It's only you who are holding the stock. So they will crash you, because when the stock is going down so quick, you don't put stop loss and you are waiting. The stock each day is going down and down and down and down until you can't support it and you lose a lot of money. This is a psychological problem. Yes, 10 grand. It doesn't mean you should buy $1 or $2. You can buy $7, $10, $12, $13. You have money. It means $10 is okay. You can buy $10, $12, and if you can use my training level 2, how to search for stocks using stock screener, you can specify price. Let's say under $15. Okay, so when you specify under $15, it will give you all the stocks under $15 and you can choose from them. Let's say you find 10 or 20 or 30 stocks. You can choose one of these kind of stocks and you buy from them. Even if you don't find today, you can see tomorrow. But most of the time, each day you will find some stocks. A stock that it is $10, $7, $6, $3, $4, $1, whatever is a stock. If you know how to trade, if you are using my strategy, you can find a lot of stocks like these and you can buy them. So there is no need to buy Google or to buy Apple, and you can't make it because you don't have money. Okay, that's why I told you sometimes when some people have little money, they can't make it because they can't buy what they like. So you are obliged to buy smaller stocks, and this is what I do. If I were in your situation, I buy smaller stocks. Okay, so there is no need to buy bigger stocks where you can't get that much money from them. And I had made a video, I had made a live session before, how to make thousands of stocks of dollars from small account. You can watch that session. You will have a lot of information about that. And in general, you should buy smaller stocks because smaller stocks move faster than bigger stocks, and this is why you can make a lot of money and there is a lot of risk. So what you should do is you should bear the risk by understanding the strategy. Okay, if you don't have a strategy, you just buy and sell like this, believe me, you will lose all your money after 6 months or 1 year, and then you close your account and that's it for you. That's why for me, I am not asking you to do higher risk, but you should learn first. You should learn how to trade. If you learn how to trade, everything will become easy for you. Okay? So, as I told you, we have seen psychological problems. Now we have seen stop loss problems. So a lot of people, they put a tighter stop loss. They can't leave the stock move here and there. So any fluctuation, you will find yourself out. That's why a lot of beginners, they say, oh, we don't like this stop loss because the stock goes down a little bit, it goes up and I'm out. Yes, it's just because you don't know how to use the stop loss. Okay? So this is the problem. So you should first fix your problem in order to make results. If you are doing the same problems, you will have the same results. Okay? This is logical and you should understand that. Now, another trading mistakes is to use margin account when you don't know how to trade. Okay? This is a very big problem because it doubles your losses, it doubles your profits. But since you are beginner, it might be doubling your losses always that makes you lose a lot than normal. Okay, so there are also a lot of problems related to commissions. Okay, when you don't fix how many trades you want to do in the week or the month, you don't know how many trades you are doing a year, so you will be losing a lot of money from commissions and from fees without knowing. Because here is the trick that you can see in every broker. They don't show you what they take from your account. Even if you want to know, it's very impossible that they will ask you by yourself. But this information they have, but they don't supply it into the broker. Okay, they don't supply it. So if you are just trading until the end of the year, and then you will see that you have traded 700 or 1,000 or 2,000 trades without, especially those who are doing day trade and they don't know what they are doing, you will find that you are feeding your broker the whole year. And then at the end of the year, you begin complaining about losing money. You lose because you give your broker all your profits. And you can check that. Okay? You can check that, how much money you make, how much your broker make, and then you will find that you are feeding your broker only. And this is why the brokers likes to have more and more and more and more customers. And they give them free teaching. They give you free webinars. They give you everything you need, at least to keep you trading. And they know 99.99 that you always lose. But they keep teaching you the same strategies that they don't make money. The idea about this teaching is to let you try and always try and always try, always lose, always lose, always lose, because it's not their problem. It means they try to help you, but they can't help you that much in order to make the money from the market, because themselves, they don't make the money from the market. They make it from you as a customer. And this is a real problem about brokers and what they do. Okay, so correcting your mistakes is something very, very important in your life like a trader. Okay, if you are doing the same mistakes, you will get the same results. And this is very funny that this thing is like logical. A lot of people, they don't understand this idea, but it's clear for some people, but it's not clear for other people. That's why I'm trying here to explain more and more about it. Okay, so let's get a break. If you have some questions, since we are still talking about how to correct your trading mistakes, if you have some questions, and we can just proceed and continue explaining the trading problems that most of the trades get. And there are other kind of problems when you buy in the morning without looking at the price. Some people do this. I don't know if you do it or not, but let's say they like a stock today. Let's say today is Monday. Let's say it's Monday or Tuesday, and you at night you find some good stock and you want to buy it. You say, oh, it's a good stock, but I didn't buy it in the day, so I will buy it in the morning. So you just go to your broker, put a market order to buy a stock at 9:30, whatever is the price. This is a big mistake. Okay, it happened to me before, and that's why I told you always that the mistakes that I have done, I'm trying to explain to you, at least you get an idea. One time I find a good stock, but it was late. It was like I was at night. I was just screening at night, and I look at the stock and I like it too much. But it was the earnings, and I don't know the earning reports of the day. I have no idea why the stocks go up or go down. So I put like a market order to buy in the morning at 9:30 without looking at the stock. So what did happen is that the stock opens so high because there is a market order, there is a gap up. Let's say the stock was $10. But let's say I bought it in the morning, I bought it at $12 or $13. But the stock had been going down until the price it was of yesterday. It means that I bought it on the high, and I will sell it at the end of the day with a big loss. This is where you buy a stock and you don't know the price. So my suggestion is never buy without knowing the price. It says the stock is at 23 and I buy at limit 22 for 25. A few minutes I see the stock going up, going down at 20, hits my limit buy. I'm receiving the share. No, see, I'm telling you about the limit order. At least investor land, when you understand this order, and then you can apply it on your stock, what you buy, and you can understand your situation. When you put a limit order, you should see the bid and the ask. Okay? Now, if the stock was 23, okay, and you put a limit order at 22, 25, as you said. Now, I'm asking the question: why you buy at 22, 25 where the stock is 23? Why you want to buy it low? Is it in the same day, or is it in the future you want to buy at 22 or 25? I don't understand you. Because normal way, if I want to buy a stock, is when it is going up, I put my price up. Okay, not down. But you have put the opposite. Okay, you have put the opposite thing. People, they don't buy the stock when they think it will go down and they buy it. Why should they buy a stock when it's going down? Since it's going down, I will short it. I will not buy it to go long. This is a mistake that you have done. I don't know if you understand what is a limit order, yes or no. I know maybe you understand the limit order, but the strategy that you are doing is false. Okay? Yes. No, wise man, and just for YouTube, this is how I buy. I don't buy. I buy at the end of the day if the day is good, according to my criteria. But I don't buy because the stock has been going down. No, I will not buy that. Okay, no, I don't buy. But he said that the stock was 23, and he bought a buy limit at 22, 25. Okay, and the stock was going down and it reached his buy point, and then he bought the stock. So my question is, why you buy the stock when it's going down? Okay, so this is not, for me, it's not a good technique for me, but I don't know what he thinks to do. Oh yes, okay, thank you. I see now maybe you understand my point. My point is, we are buying because we think the stock will continue to go up. That's why we buy higher, 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 higher. We are not going to buy lower, 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 lower. Okay? No, we are not doing that. We are thinking that the stock will go up. That's why we buy it at, let's say, 23, and we are thinking the stock will go to 27 or 30 or 50 or 60. So we are positive that the stock will go up. That's why we buy it at that point at the end of the day. We don't buy in the morning. In my strategy, I will go always at the end, because we should need to see a signal. Okay? We should see a signal in order to buy. Now, this is a big mistake, as I told you. And that is one of the mistakes, but not all the people they do this technique. But I'm just highlight it. Another thing is that most of the people, they don't know how to follow stock, and as we have seen this in training level 7, how to follow an uptrend. And most of the people, they just follow the trend, but they don't know where to put their stop loss, how to change it, how to move it. Now for this problem, I told you that you should always try to see the techniques that I use in training level 7. These techniques are based on price and based on what you see. Thank you very much, Mayway Johnson. I know you were, I know you were just mad at me because I stopped you from speaking at this what is it called, Robin Hood. You know, I get just to let you know that I was from the first to get an invitation to use it. Okay. But when I see that there is no bid and ask, I refuse even to take a free trial. Okay, I don't want to play the fool and to use an app. I don't like the apps. I like my computer to see the chart, and I should see the bid and the ask. If there is no bid and ask, there is no live data or the information, I'm not going to do this broker. I have been before with a broker, even when there is execution is bad. Okay, execution is bad. I want to buy a stock, and I stay like 5 seconds, 10 seconds, and there is nothing going on to my thing. I call them. I say, what's the problem with you guys? I buy from the ask, and I see the ask and the stock is liquid. It means it is good. There are a lot of sellers, a lot of buyers. But when I want to buy a stock with I understand that they are doing a game or play, and their execution is bad. That's why I just stop from them, take all my money, close the account, and go to another broker. Okay, so try not to stick with losers. If you think that someone like a broker is not good for you, the execution, or there is something which you don't understand, they don't want to explain to you, man, just take your money and find another broker. Brokers we have thousands of brokers, so don't worry. You have this, you have that, you have that, so don't worry. When the stock goes lower and lower, the big buyers are not buying. If those with too much money won't buy, why should others buy a stock going lower and lower? No. Sometimes people, you know, they think that the stock will go up according to their strategy, or this, as I told you, how my training level 13, how to buy from the support line. The people, they are doing this strategy. It means my strategy, which is their strategy, with some slight differences. Now, when you want to buy from that support line, okay, sometimes you will never know if the stock will go up again and make a big trend. Sometimes the stock is going down, then it goes up a little bit, few days. You think it's good, you buy, and then it goes down, down, and down. It crosses the support line and go down, and we have a downtrend. And some people, they short the stock. It means they push the stock down and more, which is very good. Okay, because they are short sellers. They are making money when the stock. So it depends. It depends on you. Are you going long or going low? Okay. And you say, why do people buy? You know, in each second, thousands of transactions happen. Some buy, some sell. Why? Because the people are illogic. People are fool. Thousands of people, they are beginners. Millions of people, not thousands of people. They don't know what they are doing. Someone takes a technique from this guru, the other have read a book, how to make millions in 1 second, like this kind of books, and others they read about famous traders and they want to do the same as them, and some they go to some online gurus that they have never traded before and they try to teach them how to trade. Some they go to their brokers, some they do from their mind. Okay, they do just from their mind. It means this is what we call hit and miss strategy. So that's why the market is illogical. So you should have a reason. When I ask you why you buy this stock at that price, you should tell me your reason. If you don't know a reason, you are one of the fools in the stock market. This is funny, the fools of the market. Okay? That's why I'm telling you, my first search when I was a beginner is I want to understand why the stock goes up, why the stock goes down, what is the thing that makes the stock goes up or down. This is my main concern. And this is the question that anyone should ask before he begins to trade and understand the strategies. No, news, no, but see, sometimes I buy stocks for the earnings dates, and I'm thinking that it might be a good news. I do that, but it is not a news. When I hear the news, I go to do it. No, I do it before. So I buy the stock before. It means according to my criteria before. And if it happens there is a news, I will stay. Like reports, earnings, reports, news, I will stay because I am not scared of the market. Whatever happens, happens in the market. I don't care. I do the risk that I want to do, because what if the stock has a gap up? Well, what you should do? You will be crying when you see a stock having a good gap up and you sold your stock before, or you don't buy it. Okay? Yes, but wise man, thank you very much, Theo Callias. Thank you very much. Unless I am the one making the stock go down, I won't buy. Yes, you know. See, if you understand why you buy or why you sell, this is enough for you. Don't worry about the others. Why are you worrying about people who buy and sell? Go right now. Okay? Go whenever the market is open. Go to the bid and ask and see the size and see how many people, how many thousands of shares are bought and sold in a second. In the whole market. You find millions of shares traded a day. People are doing they are doing day trading and they just buy and sell, buy and sell, buy and sell. This is just an activity they do. Some they have some reason and they know how to trade and they can make some money, but others they are just losing money. Some they have millions of dollars and they are doing just trades because they like trading. So they lose or they win, they don't care about that. What they care is that the excitement of doing something. It's like gambling, it's like another excitement. It means you do something for the sake of doing it. So you are not going to make money from it. It's just you have fun, as they say. But asking the people why you sell or why you buy, because you when you buy the stock, someone is selling. Now you can't ask the other one why you sell, because you are buying. So you have your own reason, and he or she has her own reason. So this is how the market is built, because of the opinions of the market. Each one has a different opinion. If I tell you tomorrow the stock, for example, on Monday, if the stock will be up or down. Okay, you will have your opinion. You say I think that the market will go up, the others say go down. Okay, you just give your opinion. So that's why we say that the market is illogical. The market is always going up, going down, going up, going down. Okay, so people, they buy, they sell, day traders, scalpers, swing traders, investors, mutual funds, all the participants, they participate and they do trades. Okay, and when you say correcting your trading mistakes, is that when you have, let's say, you have $5,000 and you buy one stock with $5,000. Here, the risk is the highest and the profit is the highest. Okay? Because if you want to minimize the risk, you should make 2 or 3 positions in order to make the risk less. If you want to have the high risk, you should do one stock with your little money. Okay, this is just based on risk management and how you manage your trades and your money in your account. Another thing, a mistake, is that a lot of people, they don't add to their account. Let's say you have saved, let's say, $5,000. You put it in an account and you begin to trade. The first year, the second year, the third year, you don't put more money, and you expect a miracle from this 5,000 or 2,000 or 10,000. You expect always a miracle from this money. Instead of doing a good practice is always add money to your account. Now, why I'm always saying this? Because this has to do with you in the future. Now you are a beginner, you don't know how to trade that much, you don't know how to trade, but you are taking training and you begin to understand how things work and you begin to trade. But believe me, after 1 year or 2 or 3, when you know how to trade, you will get stopped because you don't have money. Okay? You don't have money. You open your search, you find stocks to buy. They are excellent according to my criteria, according to what you see. Now, what do you do? What do you do if you find 15 stocks that are good and you have $1,000, $2,000? You can't buy them. And you should always be obliged to buy small stocks. That's why what I told you before is always saving more and more and more and more money when you are young. Because when your account is bigger and bigger and bigger in the future, even if you don't want to trade, you can rely on dividend, or you can rely on this big account, and it can give you a high percentage, and you can use that high percentage to supplement your income when you are older and older. Okay, that's why people who with bigger money, they are always at ease in their life. But see, it's not they don't make this $1 million because they do it in 1 month or 1 year. Okay, some people, they work the whole life in order to make that money. So it is like an investment plan. You should make a plan and you should invest accordingly and buy shares, buy stocks, okay, and just leave them for the market. Yes, it's not it's not the market will be generous, but the market, when it is going good, when you have a lot of money, you can make a lot of money. As I have done, I have given you an example. Okay, let's say I give you 3 guys, and all the 3 guys, they get 10% in their year. Let's say 2016, how much money you get from your account. Let's say someone has $10,000, he made $1,000 the whole year. Someone who has 100,000, he make $10,000. But someone who has $1 million, he has $100,000 as profit. Okay? So you see the difference? The difference, it's not in their performance, but the difference is that someone has bigger money than the other. Warren Buffett, for example, one of the richest men in the stock market, okay? If his money goes 1%, it is too much money. But for you, 1% is nothing. You see the difference? That's why I always tell you, when you are even younger, at younger age, 25 or 30 or 35 or 40 or 50 or whatever your age, try always to push yourself to save more money, because when you save, this money will be saved from spending. Okay? I know some people, they are doing 2 jobs or 3 jobs and they are making a lot of money, but this money is a waste because they spend all their money. And I say to him, if, for example, you get fired and you don't have even some money like emergency fund to live 3 months or 6 months, at least when you find another job. Okay? So here, this is what we call personal finance. It means you should be careful about the future. It means you should always, at least, try to protect yourself from these things that happen in life. As you can see in 2008, where millions of jobs have been lost, it's just because of the crisis. Now, if you don't have money in the market, or you don't have an emergency fund, or you get fired or something, you will have trouble, and you will be maybe in the street because of that negligence. Okay? Some other kind of trading mistakes is that you have no idea when to buy a stock or how many shares you buy, and this is added to the other problems. So some people, they try to mix techniques from different styles, different people, different books. They watch a lot of videos, they read books, they go to seminars, and each guru, they give him techniques, they give him a thing, and you find the guy doing mistakes in choosing what he wants to do. Okay? One of these kind of mistakes is what we call profit target. Someone told me, what is the profit target of this stock? I say there is no swing trading profit target. Okay? Because the stock is going up, and you will never know how long it will last. How can you stop yourself from making money because you have this price target? Let's say you buy a stock at $10. You say, oh, if the stock is 12, I will sell. Okay. Well, what if the stock goes from 10, it goes to 15? Are you going to sell at 12 and you see the stock going to 15? This is stupid, as a strategy that you are doing. Profit target is done in day trading because the day is small, and you should target something in order to take some money from the market. This is day trading. This is not swing trading. Swing trading, you don't know because you are not stopped by time. I can stay 3 months in a trade. Yes, 3 months. Who will stop you? who will push you to exit? No one will push me to exit. I will stay even 6 months or 1 year or 2 years, wherever I want. Okay? So there is no this target or profit target to exit and to leave money in it. Oh no, I didn't. I was self-taught. No, at the beginning, yes, I go to seminars, I go to trainings like this. It's just all free things. I don't do paid thing. But I understand that most of these people, most of them, not all, they don't trade, and most of them, they have no experience in the market, in the real market. They just talk from books, from seminars, from other things. Now, do you get stressed when trading? No. No, this is why I do swing trading. Because of swing trading, I'm not stressed at all. I buy the stock according to my criteria. I like the chart. I put stop loss. That is my job. That's it. Next day, at the end of the day, I look. Is my stock doing good? Yes or no? If it is good, I will stay. If it is bad, I will see until it touches my stop loss and I exit the trade. So for me, it was so easy like this. So I am not stressed. But I was stressed before when I do day trading. Day trading is stressful, and you should have a lot of criteria about the volume, about news, about searching which stocks are moving, which in the same day, in the same hour. So it was frustrating to find this kind of stocks. But I did day trading. I did day trading, and I made some money. But I find later that it is not my way of doing business. Okay, it's not my way to follow the stocks in the morning, and each day I am with the stock. But for swing trading, I can buy a stock and I leave it for 1 month or 2 or 3. So for me, it's better because I'm not stressed. So this is the carinative imperial. This is my answer for you. So for other mistakes, there are a lot of mistakes that you can avoid when doing trading, and you can find solutions. I know these solutions can take time, it can take discipline, but it's a good thing to do it, and to never give up trading and correcting your mistakes. Because most of these people who it is just like a hobby, they just do it for 1 month or 2 or 6 months or 1 year. They lose their money. They don't understand nothing. They begin to rant at the market that it's manipulated and Wall Street take my money. And no, Wall Street, it will never take your money. It is you who goes to Wall Street and you throw your money there without knowing. They don't come to you and they knock their door, your door, and they say, come on here and we make you money. No, it's you who come there. So when you come to them, you should just understand the game. When you understand the game, you can make money as they do. If you don't make money as they do, it means you will be giving your money to them. This is just it's where you are in the market, because there's always someone told me, oh, the market today is bad. The market is down. I say, which market? Your market is the stocks that you are buying or that you are in. It's not the whole market. Sometimes the whole market is bad, but there are some stocks that are good. I give you an example. Last year, when we have the pre-exit news on Friday, when the Dow Jones goes down like $500 or $700 down, there is I can remember very well. I have the video if you want to watch it. 27, 26, 25. 25 August or 24, I don't remember, because 20, I think 20, 28, 27, 26, 24. 24 August 2016 on Friday, when we have the Brexit news, all the market was down except utilities. Utilities stocks, they were up, and I showed in the video, and I explained that it's not all the market. Those stocks were being going up, and they have not been touched with this news. It means that there are maybe mutual funds, they are buying at that time, so they don't care about the news. They can force those guys who short in order to become losers, because don't understand that anyone who is a short seller, they will make money. No, sometimes they lose money as everybody else. You go down and you find someone big who is buying. Okay, it's a big fish eating small fish. Understand that this is the market. So you should always be with the trend. If you are against the trend, you will collapse. Okay, so thank you very much for watching this session. We are at the end of this session. Please, if you have more questions about how to correct your trading mistakes, if you have some questions, I can answer them right now, and if not, we will end this session. It's very good always to talk to you guys, and we can discuss things and try to solve some problems that you always are getting. So I try to think about some questions, and we can just go through them. If not, we will be ending this session. Thank you very time, Mayway Johnson, and sorry to be some to have some discipline here, but there is no problem. Thank you very much, everybody. And even if you have some other questions, you can check my training. So your training course is in the description. So you mean, I think you mean, do you mean the subscription? Now see, the subscription has 4 free training only. Okay, number 1, 2, 3, and 4, and this all about how to search stocks using stock screener. This is what is the subscription. But the other ones, you have training levels from 1 to 19. You can check them. So Vic, this is my training. You can get the basics from 1 to 10, either by videos or ebooks. And there is the discount still there. You can check the discount. You click on each training, you find the discount. So what is the other question? Selling based on news or what someone else says on TV and online chat is trading mistake. Thank you for giving. Yes, thank you very much. No, I have a lot of trading mistakes, and all these trading mistakes and problems, they are in training level 17. How to fix your trading problems. So in that, I give all 28 problems and their solutions. Okay, 28 problems and their solutions. So you can just check, and you can send me an email if you have question, or you check my website, which is here as always. And especially when you have question about training or about what to choose, or what is that, and what's just thank you Golf Cheating for being with us today. Okay, I see new guys who are here for the first time, and some they are there but they don't participate in the chat, but they are listening, which is very good. And whenever you have question, you just take time and send me a question, and I will answer it back. Okay, and I'm always here and always making videos, so whenever it is good for you, you can just shoot me an email, and I will answer you on time. And the website, if you go to the website, yes, thank you very much. There is like 28 problems, and these problems are explained. Most of the guys have some problems of this problem, but not all of them, I understand. So if you go to this training, you will find these 28 problems described, and then you find the solution. Now, if you are interested, you can check this. You can check this training either by ebooks or by videos. And if you have a problem or you don't understand something, you can just ask me a question about that problem, and I will try to give you more help and more explanation, because you should understand the problem before you have solutions. Some beginners, they don't understand what is their problem. They are losing money, but they don't know what is really they are making bad. But when you follow my training, you will find problem by problem, and when you see the problem, you understand that you are doing it, yes or no. Okay, so have a good night, wise men, and Golf Cheating, and all the people who are here one by name. I can't tell all the names. There are a lot of names. And thank you very much for watching. And as I told you, whenever you have questions, just send me an email, or just go to my website, check the training, and if you find a question or something, don't hesitate and send me an email. Okay, so thank you very much, and see you next week. Someone asked me, when do we do? It's always Saturdays, if there is no if God wills, if there is no problems. Saturdays at 11 p.m. Today I have a problem with connection. We have stayed like 20 minutes until I fixed the problem, so we have problem with software. Thank you very much. What's this TYVMGN? I don't understand the abbreviation. Mersha Para, I don't understand what you write. So it is Saturdays 11 p.m. most of the time. If there is a change, I will tell you. Sometimes if I have a problem with connection, I will tell you. Thank you very much, and see you next time. Hope to see you. Thank you very much.